early 2021, the finance world got a big shock, all thanks to some everyday folks on Reddit who decided to challenge Wall Street and show those billion-dollar hedge funds who's boss. Their weapon of choice? A video game retailer, GameStop. These Redditors noticed something sus. Wall Street had shorted 140% of GameStop shares, betting on its fall. Instead of letting the big shots walk away with the win, they began a legendary short squeeze that left the financial giants reeling. GameStop was struggling. The shift to digital gaming and the impact of COVID-19 made its business model look outdated. Its stock price dropped, making it a target for short sellers who thought it would keep falling. By January 2021, around 140% of GameStop's publicly available shares were shorted, meaning some shares were even borrowed and shorted more than once. This level of short interest had only been seen a handful of times in the past decade. But things started changing in 2019 when investor Michael Burry bought a 3.3% stake in GameStop and urged them to buy back shares. Then, in 2020, Ryan Cohen, founder of Chewy, bought a 9% stake and joined the board. This got some investors thinking that maybe GameStop wasn't doomed after all. The rally was kicked off on a subreddit called r Wall Street Bets. Now, this is a forum known for its bold investment talk and meme stocks. Meet Keith Gill, aka Deep Value, and Roaring Kitty, the ultimate underdog. Back in 2019, he dropped $53,000 on call options, and by January 2021, his investment had reached a jaw-dropping $48 million. But then, the big shots in Congress started questioning his role in this wild roller coaster. So what did Gill do? He vanished from the public eye. For 3 long years, Gill's social media accounts were quiet. No YouTube videos, no Twitter rants, and no Reddit posts. Even when filmmakers came knocking at his door, no response. But then, out of nowhere, in 2024, he made a grand return. And yep, it shook the stock market again. His comeback was nothing short of legendary. After a cheeky Reddit post where he flashed a $116 million bet on GameStop, the stock shot up 21%. When he announced a live stream on his YouTube channel, shares skyrocketed by nearly 50%. His trademark cat made an appearance, and the internet went wild with messages from fans. Many call him the modern-day David, who took down Wall Street's Goliath, the broke guy who changed everything. And it's all because of what happened in 2021. Our Wall Street Bets recorded 73 million page views in a single day. It added 1.5 million users overnight, making it the fastest growing subreddit at that time. This surge forced Reddit moderators to temporarily shut down the subreddit, and Discord banned the Our Wall Street Bets server due to inappropriate content. Members started buying up shares of GameStop, making the stock price climb fast. And as it did, hedge funds started panicking. The higher the price went, the more these hedge funds scrambled to buy back shares to cover their losing positions. This only pushed the price up more. Then, Elon Musk tweeted, "GameStonk." This made GameStop's price go past $200 almost instantly. Trading platforms struggled to keep up, leading to crashes and restrictions. Let's talk about short selling for a bit first. It's a risky move when an investor borrows shares, sells them right away, and hopes to buy them back later at a lower price to pocket the difference. But if the stock price rises instead of falling, the losses are limitless. There's no cap on how high a stock can go. Now, a short squeeze happens when short sellers are forced to buy back their shares to cut their losses. This ends up pushing the stock price even higher. It's a chain reaction. By January 28th, over 1 million GameStop shares were marked as failed to deliver, and the company's market value hit $33.7 billion. This made it the most valuable firm in the Russell 2000 index. No small feat. GameStop stock soared from around $17 a share to over $500, a nearly 30-fold increase. Suddenly, Wall Street was bleeding billions, and a bunch of everyday investors were making serious money. But just when it seems like the little guys might actually win, things change.
After the trading site Robinhood suspended purchases Thursday. The company's CEO saying they halted purchases on several companies, including GameStop, AMC Theaters, BlackBerry, and Bed Bath & Beyond.
On January 28th, Robinhood halted the buying of GameStop and other stocks, leaving investors frustrated since they could only sell. Other platforms soon followed, leading to furious traders calling for class action lawsuits against Robinhood. Robinhood announced it would allow limited buys the next day, but the term was unclear. As trading restrictions piled up, the excitement began to fade. By February 1st and 2nd, GameStop's stock fell over 80% from its peak. It lost 60% in just one day and erased about $27 billion in value. AMC and BlackBerry also suffered major declines. People weren't happy. Was the market being manipulated? Politicians from all sides jumped in. They spoke against the platforms for protecting Wall Street at the expense of regular investors. The aftermath? Robinhood got hit with dozens of lawsuits. The US Congress even held a hearing to find out what happened. But GameStop stock didn't settle down right away. After peaking in January, it kept bouncing around. By March, the stock was still trading at much higher levels than anyone would have expected just months before. Many blamed Robinhood and other brokers for the crash, as the restrictions limited buying. Despite the downturn, some Wall Street Bets users encouraged each other to hold their shares, hoping for a comeback or to defy Wall Street. Unfortunately, many late investors faced steep losses as prices continued to drop. You had to be in on it from the start. It's no surprise that all this led to huge losses for major short sellers. Melvin Capital lost 30% of its value by January 28, 2021, and 53% by the end of the month. Yikes. To help, Citadel and Point72 invested $2.75 billion, but it was too late. Melvin still struggled to recover and eventually shut down on May 18, 2022. Andrew Left, head of Citron Research, also faced a total loss. He actually decided to stop short selling after this. Other firms like D1 Capital Partners lost billions too. In total, around $6 billion was lost by short sellers by the end of January. Obviously, this broke the confidence in short selling. Hedge funds now realized that social media users could influence markets just like they could. By January 31st, 2021, executives at GameStop and BlackBerry sold over $22 million in stock. BlackBerry CFO, Steve Rye, sold most of his shares, while GameStop's chair and board members made over $1.5 million in sales. GameStop CEO George Sherman briefly became a billionaire too. His shares went from 44 million to 1.1 billion, before dropping back to 901 million. While retail investors were credited with driving the surge, hedge funds also made huge profits. Sinvest Management gained $700 million from its GameStop stake. BlackRock's 13% stake peaked at $2.6 billion, and Mudrick Capital earned $200 million from AMC debt. Even the Church of Jesus Christ of Latter-day Saints saw its GameStop shares rise 900%. In the end, both individual and institutional investors cashed in. Some retail investors made a lot of money from the GameStop fiasco, but many weren't so lucky. Even Mark Cuban suggested holding, but no dice. So many users ended up losing a big portion of their savings. But the story didn't end with the stock charts. Netflix announced plans for a feature film, Dumb Money. Remember Keith Gill? This movie is all about him. And other platforms weren't far behind. HBO's miniseries Gaming Wall Street and Netflix's documentary series Eat the Rich, the GameStop saga, looked to capture the drama. Other projects like GameStop Rise of the Players and To the Moon came out. They all had one thing in common: the once-in-a-lifetime event that flipped Wall Street on its head. Whether you see it as a victory or a warning, one thing's for sure: the events left a major impact on the stock market and pop culture. Want to see more content like this? Make sure to like, share, and subscribe for more stories about finance, business, and the world of money. Until next time, thanks for watching.